The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, to most of you up there in the Northern Hemisphere. Nice to have you with us this evening. To all our friends down south, of course, nice to see all of you here. Lots of old friends here today, which is good, because I have some amazing stuff to show you, which I trust and hope will knock your socks off. There's Akhtar. Hello, my friend. Haven't seen Akhtar for a long time. Alan. Barry and Alan, I took your advice, and you remember you gave me some advice on the boat at Taupo, if I recall, and said if you have to live in Queensland, try Mudgee Bar. Well, I did for a while, and I finished up buying a house in Talai, which is a bit more civilized part of Mudgee Bar, right next door, and it's working out very well for my family, and I thank you for that advice, my friend. Albert, great to see everyone here. Who else we got? Lots of people we know here. Brian up in Wee War, mate. I bet it's hot up there still. We're getting a bit cooler down here. The other Brian in England, Brian Sullivan, our great mate, always here. Nice to see you here, guys. Graham Johnson in New Zealand. Hello, Graham. Okay, lots of people. Jerry, my friend, I'm going to talk about you in a while. John Lastman down there in Coffs Harbour, great place, loved it. Lewis, I'm looking forward to meeting you at Los Angeles. Mac as well, we're going to talk about Moon. Mac's a great Moon man. Marcel, my friend up there in Canada, I hope you're feeling well. Mary Kerno is with us. God, we haven't seen Mary for an age. Matt's here, Matt Corbett. Marilyn, darling, where have you been? Haven't seen you for a while. Peter, yes, Peter Norton, yes. Oh, God, everyone's here. Okay, Richard, Bray Alexander, good. We're going to hope to see you in LA as well. Sister Sage, hello, Glennis, how are you? How's the big Mustang guy today? Steve, my friend from Redding, California. Steve is a great guy. He was very hospitable to me when I was over there many years ago. And he's now moved. He's in LA, in Vegas, actually. Got a new chick, too. I love that. Nothing will improve your life a bit better than a bit of new material. The lovely Veronia is here with us as well, which I guess will mean that shift is not far away. But anyway, on with it, onwards and upwards. So just got a ton of stuff to talk to you about, folks, today. Some of it prompted by a conversation I had with Jerry during the week, and Jerry Winters, our preferred broker, supporting broker for us, been with us for a very long time, knows all about the Daniel codes, done a few tutorials, and has done a lot of tutorials actually, and he will be in Los Angeles with us next month when we do the US summer tutorial in El Segundo, Los Angeles. It's going to be a blast. It's going to be a small tutorial. We've got a very interesting group of people coming from pretty well different parts of the world. Plenty of American folks, some British people, and a couple of guys from Europe as well. So it's going to be a very interesting setup. And because it's small, I mean, I actually enjoy the small tutorials because it means I can spend more time with you one-on-one, which is something that's sometimes lacking at the bigger tutorials. So this is going to be a smaller one. It's going to be very nice. Let us move on, because I have to amaze you today in view of Jerry's comments to me earlier this week. So let's just move right on. I've got a fairly short PowerPoint for you, and from there we're going to move on to all the really interesting things. Just a reminder to you, if I can get my audience view up, the screen's changed. We've got our a tutorial at El Segundo, Los Angeles, at the end of May, 26th to 29th of May. It's the first one we've had since December 2013. These don't happen very often. If you're interested in a tutorial, get to this one. We still have a few seats available. I've given you all a PDF and an outline of what's going to be happening there. It's also available on the front page. But Today I want to just show you a little bit about a couple of the matters that I'm going to be talking about in length and teaching people at this tutorial, which hasn't been done before. A lot of this stuff is new. I would say more than 50% of the tutorial is new. And there seems to be an assumption that, time stands still. It doesn't. Time goes on, and I develop with it, and I find new things, and more importantly, we get the technology to teach you the new things. There's a lot of stuff about markets that I know and I've known for very many years, all of which I've had to discover for myself, but then getting that into a format where I can show it to you is a somewhat different matter. I haven't got Terry with me today, apparently, so I don't know that you're getting the volume on this. Could somebody just type whether you're hearing this all right, whether the sound's all right, or Sage, could you hit me on Skype and let me know that you're getting the volume okay? Can everyone hear all right? Yeah, okay, Victor, Gordon, Brown, got a lot of them. John, thank you, guys. Okay, I just need to check that. Normally I have Terry there. Sometimes Sage does it for me, just lets me know that you've got picture good, volume good. So I'm just going to run through some of these things and show you some of them. I trust you're going to be absolutely amazed by it all. If you do want to come to the tutorial, please send me an email by Sunday of, Friday, Saturday, Sunday this week, and let me know that you want to come. That would be great. Okay, so let's move on now. And this is where it's going to be, folks. This is Manhattan Beach, Los Angeles. Very, very nice place, El Segundo. It's only about 14, 15 minutes from the airport. The hotel shuttle picks you up. It's very civilized. And this is a really cool, sort of slightly hippie village along the ocean front. And it's fantastic. It's just full of restaurants and shops. And I'm going to take you all there for a dinner. We eat together most nights, and we have a big group dinner on the Wednesday or Thursday night. We've got a pretty special restaurant there we've been to before, as Jerry's reminded me. So I'll take you all out for dinner there with your friends and family if you want to bring them, and we have a great time. I mean, we just always have a great time with these tutorials. This is the hotel. This is the Hilton Garden Inn. If you've given me an indication that you're coming, you will get an email from me on Monday telling you the phone number to ring and the booking code. We've got the rooms here discounted from about $250 to $178, I think, is the group discount, so you'll need a special code for that. Okay, so what I want to just push on you today is that we need more of this, and this, of course, is Rodin's famous statue, The Thinker, and I'm often of the view that we don't spend enough time thinking, and there are all sorts of reasons for that. One is that our brains are now conditioned not to think. Matt, who's with us today, sent me an email during the week with a LinkedIn link to go to that program to see the details of a person that we are going to be doing some business with. And I said to him, that's fine, except to look at LinkedIn, you need to be a member and have an email address and a password, and I don't. So all of you folks who keep sending me invitations to LinkedIn, I'm not in LinkedIn. I don't want to be in LinkedIn. Further, I'm not on Twitter, and I've never used it and don't know how to use it. I'm not on Facebook. The company has a Facebook page which Terry manages, but I don't know how to use it. I don't do any of that stuff. I do have a mobile phone. It's about 12 years old. It's not a smartphone, and the only people who have that number are my family. And the good thing is it hardly ever rings. And it seems to me that we're so busy doing stuff all day, every day, that very, very few of us have time for this, which is thinking in depth. And I know even in my very much simplified life, because I've got rid of all that electronic hoo-ha that distracts you, I find it very hard to get time to think, and we're not doing enough thinking. And this came up during the week when I was talking to Jerry Winter, as I do quite often, and he made a comment that I was saying to Jerry, there are limits to what I can tell you folks at webinars. I love to tell you new and exciting things. I love to help you with your trading. That's really my purpose in life, to show you what the Daniel Code means and what it can do for you. But there are limits, and the really good stuff is reserved for tutorials, and people pay a lot of money to get that knowledge. And some people will come back to 3, 4, 5, 6 tutorials to make sure they get that knowledge and the new stuff which is coming out all the time. So do understand that there are some limits, pretty straight line limits, as to what I can teach you at a webinar, and what we really do reserve for tutorials. So that led to the conversation that I wanted to talk to Jerry about some of the markets that we're testing in Fractalian. And this will all make sense in about 10 minutes, folks, so don't lose the plot at the moment, or don't think I'm losing it. And I said to him, I want to talk to you about MD, the big S&P 400, the mid-cap market. Oh, you can't trade it, said Jerry. Okay, so I said, well, I want to talk to you about ZD, or as you would say in America, ZD. My daughter has got a bit of an American twang because we started her off as a baby with some of those American teaching CDs, which are absolutely fantastic. But she says ZD. Anyway, Jerry said, you can't trade it. So I was trying to get across a very deep and philosophical point that's worth a fortune, and I couldn't get Jerry to discuss this with me because he's so busy every day just dealing with all the stuff he has to deal with, which I understand. So I then took that argument to one of our chief programmers, and these are the people, regretfully, who really control what we can do, because when we require technology, we have to wait on others to get it done, and sometimes they're very good and it gets done in a reasonable time. Other times they get themselves into bogged down, I guess, with other work and other clients. I'm not the only partner that Trade Navigator has by any means, and things just don't happen. And I had the same conversation with this particular gentleman, and said, I want to talk to you about the large mid-cap S&P. You can't trade it. Okay, well, I want to talk to you about the big S&P contract. Oh, it's a waste of time. Don't you know there's $1.5 million, 1.5 million contracts in the E-mini. It's all in the E-mini. Don't even waste your time looking at that. So there is no thinking time available. Now, both these people, Jerry and the programming gentleman, I know them both personally. They're very, very decent people. A lot of you know them all personally too. They are decent people, but like so many of us, they are just so bogged down and focused with the minutiae of what's happening in their day-to-day life that they don't have time to do what Rodin's thinker is doing, and that is sit and think. Many years ago, an American professor called Julius Sumner Miller came to Australia and did a series of science shows where he'd show you amazing magical tricks, science in its magic, and then at the end of it he'd say, why is it so? In other words, he was challenging us. This is probably, I suppose, nearly 40 years ago now, 30 anyway. He was challenging us to think why these things happen. And that's a challenge I'm always trying to make to traders, that if you want to understand markets and get more out of markets, you have to ask two questions. The first question you have to ask is, why is it so? Why do markets do this? When you understand that, you're in a league of your own. And the next question you have to ask yourself is, how good do I really want to be? And occasionally I get emails from clients who've been with us for many, many years. I had one not so long ago from a nice chap I've known, been to a ton of tutorials, a great mate, wonderful guy to have a beer with and party with, and he said, you know, I'm not going to renew my subscription. I've been with you for many years. I've done a number of tutorials. I think I know by now how to create signals. Well, I'm sure he does. I trained him. I imagine he took that training in, and he's a very confident trader. But obviously he's reached the stage where he doesn't want to go any further. He doesn't see the need to go any further. So for the rest of his life, he's going to be a mechanical trader, which if you get it right, if you are a good mechanical trader, for most people, that's all you need to be. But there's another dimension. In fact, there's several dimensions way beyond that. And what I'm going to do is get you to think about that. What did Sage saying? The secret to getting time to think is get up an hour earlier each day, preferably before dawn. It will revolutionize your life. Darling, I get up at 4:30 in the morning now, and often earlier, so it hasn't made much, getting up early hasn't made much difference to my life, I can tell you. Excuse me, but I get your point for most people. Anyway, Sage, glad you're here, darling. Let's move on. So there's this issue about the next dimension, how you can, there is much, much more than you could possibly know. That's a quote from Shakespeare somewhere or other. There is more to life than heaven and earth, etc. Okay, what I want to show you, some of this stuff about how good do you want to be. I have a number of private clients that I advise, and for some of them they subscribe to the weekly charts. So there's a number of people who still like the weekly charts for very good reason. Excuse me, and they get the weekly charts. So I just wanted to show you on this issue of how good you can be. 3 of the last weekly charts that went out to private Daniel Code clients. The most common one they asked for, everyone seems to want much the same thing, is S&P and gold. This happens to be gold. So on March the 16th, this was the way the chart looked, and I talked about a confirmed break of the black line and how strong the black line was. David Webb, if he's with us today, as the champion of black lines, he knows all about that. It is a very, very strong support and resistance. And unlike our other Daniel Code numbers, the black line works not at a bar high low. It works on a close. So a breach of the black line, as you see on this chart, doesn't actually mean all that much. But a close below the black line would have implied that the swing at the bottom was going to go, which meant much lower prices. And that's what you can see on this report. The next report, I think the next one was probably fairly boring anyway. No, this is it, March 23rd. Last week we suggested there was strong support below this market, and particularly the market's recognition of the black line. Typical fashion, we had a false break and a swift reversal. And note that the low for the week ended March 20th took out the December 5th weekly low by just 1 tick, and that's always a sign of a snapback reversal and a false break. What I've underlined for you there, this was on March the 23rd, is that the highest probability of this market going forward is consolidation below 1224.70, which is the Daniel Code 50% retracement of the weekly swing, and this is what's happened by today. QED, for those of you that didn't do Latin at school, means quadrant demonstratum, or the fact proves the theory. And you can see exactly what this market's done. It went to that Daniel Code red line, the 50% line at 1224.70 with a degree of precision. In fact, those of you who are looking at daily charts, it gapped up. It was so desperate and hungry to get there, and it put in its high at 1224.5, just 2 ticks away, which is pretty cool on a monthly chart, on a weekly chart, and 1, 2, 3, 4, and I told our clients this 5 weeks beforehand. So, you know, how good do you want to get? Would you wanted to know this? Well, it's vital knowledge. If you're an options trader, there was a fortune in knowing that that was probably going to be the resistance. If you were a futures trader, it was a pretty handy bit of information to know. And I do that all the time, and I can teach you to do that all the time. Okay, here's our disclaimer. We always like to make sure you are aware of the disclaimer of the risks in trading, and that all of the numbers and programs we show you here are hypothetical, which means they're created by a computer. They will be as accurate as can be because that's always perfect, but they don't account for market conditions, including fills and slippage. Okay, here's our final page, folks. You see anything here you're interested in, please ask Terry at support@thedanielcode.com for a free trial, and he'll be happy to give you a free trial of anything. In fact, I think he probably gives you a free trial of everything, whether you want it or not. Right. Akhtar, are we going to have water? Well, we're going to have soda in our Campari. That might be as close to water as we get. I'm not sure what you mean, mate. Okay, so let's get rid of that and let's get on. Excuse me, let's get on with all the great stuff I've got to show you. Now, I want to talk to you first of all about Forex Pro, which is not going very well, and I want to show you a few spreadsheets. Let's start here with the spreadsheet for oil. This is Forex Pro, and this is the performance of oil for the whole month of March. As you can see, these various numbers along the sides here, these are the different tests or the different settings that are available to us, and some of them were very, very good. In fact, if we got close to any of those numbers, we'd have been really thrilled. This is a market that has a margin of $3,740, and it returned at its very best settings, $8,500 all the way down, 7s, 5s, 4s, 3s, any of which would have been good. You're talking about 250, 270% in a month. You can see also that there are some settings here that are no good, only a few, but let's look at another market, and this one happens to be feeder cattle. Same thing, this is for the whole of month, Fractalian Pro, and if we got these numbers right, somewhere near these tests here, 6, 8, 9, 5, and 3, we'd have had between $3,000 and $5,000 on a market that has a margin, would you believe, of $1,650. So there's about 400% a month. Excuse me. Finally, I want to show you gasoline. This is the same thing. This is March the 2nd to March the 31st, and you can see here, this column here is the net profit. And we could have had anything from 4, 5, 6, 7,000 all the way up to 12,000 in 1 month, and this is a market that has a margin of 3,800. So we're talking about somewhere between 200 and 300% in a month. Now, this is not happening because I am not forecasting these numbers well enough or perfectly enough. I need to do a lot more work on that. And I am doing work on that and will continue to, but it's disappointing at the moment, but it's only disappointing because I am not forecasting the right numbers, and I have to get that. It doesn't even have to be perfect, as you can see. It only needs to be close to perfect. So if this test 7 was the perfect number, you can see that we had a lot of scope. Here are the bad ones at the bottom, and here are the good ones at the top. So anywhere from about halfway up, we had a lot of choices, and I didn't get the right one, and that's where the work's got to go in on forecasting these future Forex Pro numbers. But I'm persevering with it because I am excited. I can say categorically, and you should too from seeing these figures, that if we can get much closer to these optimum settings, there is nothing that I have ever seen that makes as much money or even gets close to making the money that this program does. And because it enters and exits at points completely unknown to other participants, then you tend to get very good fills with this market. Okay, so Forex Pro. So I wanted to show you that. We're going to persevere with that, and there's huge value there. We just have to get these settings so much better for you. For any of you who have paid a subscription for Forex Pro, if eventually we can't get it right and you're not happy with it, I'm going to be happy to give you a credit for whatever you've paid us and apply that credit to any of our programs, but in particular the new Fractalian program, which I'm going to show you now, which I think is pretty extraordinary and continues to be very, very promising. Okay, so I want to show you just some detail of how this thing runs. Let's start with a 3-year run. These are just, excuse me, some of the markets that we think are going to be in the final mix. And let's run this from beginning of April 2012 to 2015 to start by getting a really long-term view on this market and see how it's managed to trade. Matt, you in particular, I know, will be interested in this and even more interested in what's coming next. And as you can see, over the period of 3 years, it's done very well on a variety of markets. It does well on some, and others it doesn't. Look down here. Look at the Russell, the worst possible market we've got. Well, it is in this time period, but if you look at March, you'll see that the Russell was actually one of our top 3 performing markets. So the selection in market selection for Fractalian is vital. And James, I think it was, asked if I was going to teach that to you today, and I'm not, because there are still some issues to be clarified about how much of this back testing program we're going to be able to release to you, and how we will do that. So we'll just work our way through that with Trade Navigator, who are continuing to do some of the new things that I want to be to put into Fractalian before we release it for trials. One of the things is, let's just go back to a year. These numbers all get very large over 3 years. Let's just crank this up to beginning of April 2014, and that'll give us a year, and to the end of March 15. So let's now run those markets for 1 year. This is Fractalian. You can see that from about here up, you know, it's all pretty exciting. There are some markets with massive returns here, some of which you're familiar with. Here is PA. Here is that's palladium, coffee, feeder cattle, 14,800 in a year off a margin of 1,650. There's gold, $12,000 off a margin of 7,000, about 6,600 now, I think. Here's wheat, much despised. Very few people trade it, and it's pretty nice because it's got a very, very small margin. And here's gasoline, and some of these you're familiar with. These ones down here you're not familiar with so much, and or we are familiar, but the results are lousy here, and that's because we're looking at a reasonably big time frame. When we go down to a month, take particular note of this, if you will, right at the bottom. This is TF. This is the Russell 2000. It's the worst market in this group. It lost $24,000 in this time period. So let's just look at what we can do with some of these markets very briefly. The one I'm showing you now I've highlighted for you, which you should be able to see, is oil, CL3. This is crude oil. And it certainly had a less than stellar year. In its net profit column, you can see it's only made $2,500, and it's had 168 trades to get there. So that's pretty unimpressive. So one of the options we have with this thing is we can change the settings. Incidentally, commission is included in all of this testing. You can see the commission number is already in there. What we can do is we can allow this thing to pyramid, and we can then get a slightly more realistic picture about it. And with that same option we were looking at before, you can see that oil has now gone from $2,500 or so up to $16,000, and it's run that off a margin of $3,700. So it's I don't know, it's 4 times, 3.5 times, 4 times. You're talking well over 300% on this market by allowing it to pyramid. Now, you may not have noticed before I wrote it down, but it now has 195 trades if you allow it to pyramid over 1 year. On the non-pyramid option, it had 167 trades. So allowing it to pyramid, it in fact has only pyramided 28 times, or a bit more than twice a month. And for those of you who come to the tutorial in LA, I'm going to show you how to pyramid at no additional cost. In other words, when you add a contract, you're usually up for another lot of margin. In fact, where everyone else trades it, you're up for the margin on the next contract. I'm going to show you a way that you don't need to expose yourself to double margin. But as you can see, this is quite extraordinary. I'm very excited about it. Let's just go back now and run for you the month of March. This is going to distract me, but bear with me. I'll come back to the main point of all of this. So let's have a look at March. This is March, and let's just run March the 1st. Change the year. This is the month just finished until the end of the month. So let's see what we have here. There's something, we've got an error in here. Okay, I didn't like that at all. Let's see if we turn that off, see what the problem was. Fractalian, we want to go from March the 1st, that might be why you need them. March the 1st, the 2nd, I thought we actually had that right, to March the 31st, see if it'll take that, is it like that? Yeah, there you go, right. Have a look here, look what's happened with TF in the month of March. $8,000. On a margin of about $5,500. So it's knocked out 150% or more in a month. Let's go back and let's allow it to pyramid, see if that helps. Now, it doesn't with all markets. Some markets benefit from pyramiding, most of them do, others don't. Okay, this is one that did. Have a look at this. We've now got 11,370 and an 87.5% win rate for the month of March on a margin of about $5,500. So you're over 200% return, including commissions. And this was, remember, the worst market we had on our 12-month testing by a long, long way. So what happens is these markets give signals that they're going to come good, and that's the selection process. And there's a number of ways to do it. One is chart patterns. Two is some Moonbeams, which I'm going to talk to you about in a while. And three is simply by running the data over the correct time period. And I'm going to be spending a lot of time at this at the tutorial, and we might come up with even the fourth and fifth way of doing it as well. But market selection is vital to this program, because you certainly could have gone through the last year and Russell would have been the first one you discarded, and you certainly didn't want to miss what happened with the Russell in March. Okay, so that's a quick look at Fractalian. There was a very important part of this that I wanted to show you. Let's get rid of the pyramiding and let's go to a different data group, because this is astonishing. This is one of the things I wanted to talk with Jerry about, and wanted to talk with our programmers about. And let's run this for the past year. Okay, so we should be right to go. Doesn't like that date. That'll keep him happy. That should actually be April. We'll give you 12 months to the end of March. So let's run this. And what these are here are the US equity contracts. And what I want to show you, and this goes to this issue that I was trying to talk to Jerry about, trying to talk to our programmers about, is thinking. it's easy to say, oh, you can't trade it, and leave it at that. And that's the response I usually get from anyone when I try to show them what I call D2 or derived data. And D2 or derived data, which is one of the most powerful forms of trading, is when you take the data from one market and use it to trade another. So let's just have a look at what we've got here. MD and EMD. MD is the pit for the big contract of the S&P 400, which is called the mid-cap index. It doesn't trade anymore, and in fact when you look at the chart, which I'm going to show you before this is over, there is nothing in there except dots. Nearly all of it, I'd say better than 96% of it, is close only because there has been no trading. But if it is the same market and we have a program that has set rules and is being run by a computer, then the E-mini version, which is EMD, should pretty much mirror what's happened with the big contract. That's the common belief. And as you can see, it doesn't. The big contract mid-cap is about our best contract, 109,000 in a year on a margin of about 32,000. The E-mini contract, EMD, which has a margin of a bit more than 6,500, is with the Russell pretty much the worst contract that we have here. So, why is it so, and what can we do about it? Just let me show you what happens here when we switch on. Again, there's commission and everything here. Let's go back and let's just run this with the pyramiding. Now, for a few extra trades, you've got this MD up to $140,000 in a year. And look at the mini contract. Woeful. So what happens? Is it the best thing in life to say there's no volume, forget about it? Or do we say all the potential in the world is there for us? We just have to think through the opportunity, something that probably no one ever thinks about, and how do we use that to our benefit? And it's pretty clear. Let me take you to another example. This is the S&P big contract, and it comes in two parts. SP067 is the pit trading session, and they're still keeping the pit going. Excuse me, on the S&P. Let me take off pyramiding because I think we've still got it on. Let's go back, if I may, and it takes a minute to run. It's a pretty amazing program, isn't it? Let's have a look at the S&P. This is the big S&P, and that's SP3. And down here is the E-mini, and this last one, ES1, is the day trading session of the E-mini. Now, these markets are supposed to be so close that arbitrageurs are keeping them in line all the time. An arbitrageur is someone who's in the business of taking advantage of disparities in market pricing. In other words, if one of these price groups gets out of line, they will buy it or sell it to force it back into line with the dominant force. The dominant force in these markets is the big contract. Those of you who've been with me a very long time will remember that when I started the Daniel Code website way back in 2007, whenever it was, I used to do the S&P charts from the big S&P. In fact, we used to use the WP contract, which is the combined pit session and daily session, because I knew that it was the big contracts that are the dominant price setters. Try and tell that to someone today, and they just think you're a blithering idiot. I was trying to explain this to one of our senior programmers who's helping us get this stuff the way I want it, and he was scornful. He was like, there's 1.5 million E-mini contracts in the S&P. Don't even look at the big S&P, and what he was kind enough not to say was, you're an absolute fool, Needham. But he might as well have said it, because I got the implication. For nearly everyone, their minds are not open to be inquiring. When I was young, it was considered a good thing to have an inquiring mind. Today, we don't have inquiring minds. Kids spend one day of the week on Facebook and Twitter and their wretched smartphones. They are not thinking, and most of you are not. I hope you, being Daniel Code members, are open to this stuff, but very few people are, including people that we work with closely. So why is this important? Well, this is very important because if you look at the SP3, the S&P trades in the pit. It's the only big market, big contract pit that is being kept open by the S&P, because by the CME. They've closed the pit sessions or the electronic sessions for a lot of these other markets, which you can read about the CME website. But the S&P pit is staying open because it does have significant volume, and it's very important. So this is a one-year run, 63,000 in the pit session, or what's called RTH, regular trading hours, and 81,000 in the out of hours. That's the electronic component after the pit closes and before it opens. So in there, with that one market, you've got a total of $144,000 profits after commission in 1 year. Okay, so let's go down the page and have a look at the E-mini. The big S&P is 5 E-minis. The E-mini S&P is $50 a point, not a tick, a point, and the big S&P is $250. So if you divide that 144 by 5, the E-mini contract should be returning us about $29,000 a year, and it isn't. Okay, so what we have to ask ourselves is, why isn't it? And I can tell you why. It's because a lot of amateurs trade the E-mini. I can tell you that that's where all the algorithms are running. There are trades going on news, suspected news, interpretation of news, none of which has any real effect on the market other than very, very short term. But you can see from these figures, you compare the combined SP3 and the SP at 145,000 with the E-mini, which should theoretically give you the same result. It's exactly the same program. It's run by a computer, so it can't be different. It loses $3,500. That should tell you how, I'm going to use the word corrupted, the mini contracts are against the true price setter, which is the big contract. Okay? Now, why is this important to us? It's important to us because we can use a basic bit of intellect to say, we probably don't want to trade the big S&P. I used to trade it all the time. Very few of you will want to trade it because it's got a margin of $22,000, $23,000. Everyone wants to trade the E-mini. But we can take the trading signals from the big S&P, and we can take the trading signals from the electronic version of the S&P, and we can do the same with the NASDAQ. Don't forget, here's your NASDAQ up here. This is the big contract, and here's the mini contract. It should be 1/5. It should be about 11,000, 12, 13,000. It's 3,000. We can take the data from the big contract and trade it in the mini contract, that D2 or derived data. Okay, and it's vitally important. And if we do that, we will in fact get in the mini contracts 1/5 of what the big contract is showing us. So let's see, why is this important? The S&P is the most important market that we have, and this is why. This is something new for you guys. These are what this is. In fact, what this is the fourth seal on a daily chart. I've never done it before, and I've never shown it to you before. These are what I call moonbeams, because I can't think of a new name for the fourth seal on daily bars. So I asked Mrs. Needham what color moonbeams were. She's an artist and a poet and a person who's more in tune with these things than I am. And she said they're silver. So I put all these on as silver. And after I put a few on, of course, they had disappeared. So you'll have to bear with me and allow me to use red Moonbeams, because the only colors I can see being a dichromat are red, blue and black, pretty much, and silver I'm sure you just disappears. But pretend they're Moonbeams, because this is all related to the moon. And Mac is coming down to the from Seattle, I think, Mac, to come down to the Daniel Code tutorial at Los Angeles, and he's an expert on this stuff. I've been doing it for about 20 years, and I'll show you exactly why, but Mac's very, very keen on it. It's bringing down a lot of data, and we're going to see what else we can learn, and I think we're going to learn a whole deal. It'll be wonderful. You should be there. You should be part of it. I have 2, maybe 3 seats left at the tutorial. Shoot me an email today, please, if you'd like to come. Okay, let's have a look at this. What have we done? This is the S&P. This is the big contract. I wonder, can this work here? And you can see this starts off, I start at this point, which is August last year. And you can see with these daily fourth seal, which is I've never shown you before, I haven't taught it before, this will be the first time I'm going to teach it for you, we find every single significant turn on this chart. And so far, from then until now, there have been 19 of them. And we knew these turns with a high percentage of probability. In fact, very, very high. There are 3 different ways of getting these turning points. One of them is the Daniel Code linear numbers. That's the Daniel Code charts, which you see members charts. And you all should have the tools. This guy over here in particular, this is Dan the Hedgehog, who's our little logo. And if you don't have it, contact Terry. It's in the Daniel Code Trade Library. We'll happily give it to you. It's all free. And that's the first way, from the Daniel Code numbers. The second way is from these Moonbeams, which is the daily fourth seal lines. And it takes you about 30 seconds a chart to put them on every day. The third way is there are more Moonbeams, which I'm not showing you here, but they are targets, intermediate and bigger targets that are created as part of the Daniel Code matrix, which I'm certainly going to be teaching you about at the tutorial in El Segundo. When you get one of these things happening, it is persuasive. When you get 2 of them happening, it is very persuasive. And when you get all 3 of those methods lining up, you can pretty well bet that it's right. There are at that level, there are very, very few errors. And the interesting thing is, the more drama there is in markets, you have a look over here. This market was thundering down, big, big bars. Look at the little bars up the top. Now it's thundering. The more of this type of volatility, for almost all other programs, they die. With the Daniel Code, it gets better. It gets stronger. It loves those big bars. So this I'm going to teach you at LA. And for the rest of you, contemplate, how good do you want to be? Would you like to be able to do this? Now, a word of warning. I know that some of you, not many, but some of you love to take screenshots of these webinars and then try and reverse engineer what I've done, because, of course, in your way of thinking, it's much better to steal it than to pay someone to teach it to you. Let me caution you that not all of these lines are true. All of the points that I have found, and I will show those to the tutorial folks. But those of you who are trying to reverse engineer these, a large number of these lines actually intersect the right points, but they don't come from or pass through the key points that you need to use this stuff. So don't waste a lot of time trying to reverse engineering it, because you won't get consistent answers. Okay. Excuse me. The next chart I want to show you is silver. We talked a bit about the moon, which is how we got to Moonbeams. Those of you who've been with us for a while will know that the first number in the Daniel Code sequence is 29.6. And that comes from the Bible, the book of Daniel, chapter 12. I've told all of you who come to a tutorial the mathematics of how you do that. And I've been doing that for 4 or 5 or 6 years now. Nobody's yet contradicted me, so I guess You know, 1395 divided by 45 means the same thing all over the world. But it's the mathematics from the book of Daniel, written about 600 BC, that this was set out. And it wasn't until many years, I mean, I started discovering this stuff 22, 25, maybe 26 years ago, the Daniel Code, and it wasn't until many, many years after that that I realized that 29.6 is also a synodic month. You should be able to see this page now. It's Wikipedia. And a synodic month is the lunar cycle that runs from phase to phase. In other words, new moon to new moon or full moon to full moon, is 29.53 days, which is 29 days, 12 hours, 44 minutes. In fact, that synodic month cycle can vary by up to 7 hours. So the nearest number that truly represents that on a 1 decimal point basis is 29.6, which is the first number and the prime number in the Daniel Code sequence. And when I learned that, then I started on a journey of saying, well, isn't this amazing? Let's think about that. The prophet Daniel back in, excuse me, 640 odd BC, without accurate timing mechanisms, they had water clocks, they had sundials. He was able to write in hidden code in the book of Daniel, which was written while he was a captive of the Babylonians, the Chaldeans. He was able to write that book, and he put in there a code for the benefit of the Jewish people, particularly the Levites, which were the tribe of the Jewish people who were responsible for keeping time. They were also the tribe responsible for most of the temple activities. But time was a very, very important thing in those days, as it is now. If you had you wanted to get your dates to market, and you said to the guy who owned the camels, I'll have my dates at the waterhole at 20 past 10 or 11 o'clock, then it was important the guy with the camels knew roughly when that time was going to be, so he'd be there to meet you. And time was a vital commercial commodity. And Daniel wrote this in code because he was a captive. A lot of you should know the story of Daniel. I've talked about it often enough. Those of you coming to the tutorial will get a full version of it. And that's why this is all called the Daniel Code, because that's where it all comes from. Once I realized that the Daniel Code time that Daniel had said was time, the first number, the monthly, the true number for the phase-to-phase or synodic month was 29.6, I got pretty excited. Now, the Jews then had a lunar calendar, which was vital for planting, religious festivals, time, everything else. And I started to look, 20 years ago anyway, more than that, because I was, can't remember where I was, but I sort of know. Anyway, let's move on. I don't care where I was at the time, really. And I want to show you silver. And these cycles work particularly well on silver and also on the S&P. Excuse me, coughing in your ear. And here it is. And what you're looking at, this is the silver chart from about November last year through to now. And all of these marks on here are moon cycles. Some of them are synodic months. Some of them are Daniel Code fractals of the apogee. Some of them are the fractals of the perigee. The occasional syzygy's made its way in there. But you can see that these are incredibly accurate when they have come from nothing except moon cycles. And if you want to know about this stuff, you can go and buy what's called the Ephemeris, E-P-H-E-M-E-R-I-S, which is a very, very documented set of tables of moon cycles in great detail, and all of the major planets. It's published by NASA Jet Laboratories in the US. It's a pretty specialized book. You probably have to ask your bookstore to get it in, and it's like a great big thick textbook just with tables and tables and tables. But if you want to get accurate, and I'm just showing you the very basics here, I'm just showing you the raw numbers. Once you start applying the Daniel Code fractals to the lunar cycles, you will be absolutely amazed. Have a look at this. Here's this massive, great big drop and snapback reversal right on one of our moon cycles. Here's the next moon cycle. It didn't hit the top. It works a little bit different, but look what it did do. It gave you the acceleration down. This cycle here stopped the down move. You got a rally up to target. It's not actually target. That's just a symbol I've used for a different type of moon cycle. And then down to another target. A day later, you get the acceleration bar. Up it goes. A couple of bars back into one of these target settings. Up again. Just track these through. Right at the top, there's a very strong target signal that run up is over. 2 days go by with very little happening. Just look at the two closes here. They're just sitting absolutely static, and then it's the moon signal it was waiting for that gives us the acceleration down, and whoosh, away it goes. We get this rally back up here. We get another one of these target signals. Down it goes. We get this little catch up here. There's the low. It comes to the moon signal, and that stops the run down, and then it goes up. Same thing. It runs up to the next one of these moon signals. Down it goes, all the way through. Just have a look at this stuff. It's amazing. Here, that actually is a fifth seal line that it stops at. And then it wanders on. It's waiting for the moon to get to the right cycle. Nothing happens on this one. Here's the next little cycle here. It's 1 day off. The next day, there's your acceleration. There's your fast move up. It goes right up into, well, it's another fifth seal line, but the next day it tells you that that particular run's over. 2 days down, the moon cycle comes again and causes a rally. And this is all just straight off the moon. And this is the most basic stuff. When you come to a tutorial, we'll go through this and the fractals of it. And how good do you want to be? Is this stuff amazing? Is this magic? Is this mystery? It's been in plain sight for thousands of years. We're not thinking enough about this stuff. If you have the access to this information, how much better is your trading going to be? Well, it should be a whole lot better. And finally, you remember we talked earlier about using the chart from the mid-cap, the big contract in the S&P 400 mid-cap, to use that for our trading in the mini-contract. Well, have a look at it. This is why CME stopped trading in it. Let me show you. And there it is. If you think you're looking at a whole lot of blank space, your charts have just changed. You should have it now. If you think you're looking at a whole lot of blank space, you are. This is the chart since March 2014 all the way through to now. Okay? They've stopped trading this contract, but they stopped it a long time ago, as you see. But we just ran Fractalian on this program. You were here. You saw me do it. Do it again if you like. And it is the best trading program we have in Fractalian. And it doesn't have any bars. All it has is an open and close, which is the same number on nearly all these bars. So how can you use simply an open and close to create a dynamic trading program? And that's a great question, isn't it? And I'll answer that question as well at the tutorial. All right, folks, well, that's it. Our hour is up. I hope you've been amazed. All of this we can simply call magic. I've shown you some mysteries. I've shown you some magic. And I've shown you some moonbeams. I hope you've enjoyed all of that. And most of all, I hope it gets you thinking and inquisitive. Let's see what more we can get out of this. Remember, particularly if you would, with all of this Daniel Code stuff, this is very new. This is very cutting-edge stuff. These are things I have discovered, and what I've discovered is just the tip of the iceberg. it would take 10 people a couple of lifetimes to work out everything that could be learnt from these fourth and fifth seals and now these moonbeams. I haven't got the time to do all of that. And I'm getting older. I have to do this stuff on my own because I'm the only one who fully understands it. I invented it. I know what its quirks are. I'd like to develop this a whole lot further. I hope some of you will take it and do the work to go a whole lot further. So this is the stuff. I wanted it to be amazing. I wanted it to be magical. I want to show you just a bit of what else is out there, that you should strive forever. There is always more and more to learn. I've been doing this stuff for 35 years. I've had the Daniel Code for over 20 years. I am finding new stuff every week, and you can too. In fact, you can do more than me. You can take this stuff to the next level. So there's a challenge, and I think I'm looking forward to seeing some of you, including some old friends down in, well, for me it's up in Los Angeles, which is going to be about an 18-hour trip for me, which is fine. Excuse me. So I'm glad you guys enjoyed that. Interesting point, we don't have any returning tutorial people coming to LA. So I guess that means you're all worn out, or you know so much that you don't need to talk to me anymore. Either way, you're wrong. I'd love to see some of you there, and it's always great having a few people there who've already done a tutorial. It's a great help to everyone else, and at least 50% of this tutorial is new, so get yourselves organized and shoot me an email, and I'll look forward to seeing you there. All right, folks, thank you for being with us today. I trust you've enjoyed this, and I trust you're amazed by it. We seem to have a very quiet group tonight. We don't have any questions, which is great. And Akhtar, I am assured that we do have water. We do have water at the hotel. Okay, folks, those of you who enjoyed it, thanks very much. I'm glad you did. Remember, there's always more. There's always something you haven't thought of. There are marvels and mysteries in trading, and the more of them you know, the more money you're going to make. And yes, mate, always staying thirsty. That got a bit of a bashing by being used by Shane Warne after the Cricket World Cup final here. But that's great. Okay, thanks, guys. Glad you enjoyed it all. I will look forward to seeing you at another webinar in a fortnight. Thank you, Brian. Brilliant stuff. I'll have to tell Jerry that. He said my stuff's boring and there's nothing new. Thanks, folks. I'm going to end the webinar now. I've gone a little bit over time. Not much, not as much as usual, but that was pretty intense, all of that. So I'll see you at a webinar in 2 weeks, and for those of you who want to learn more, want to do more, want to take your trading to the next level and start using some of the stuff I've been talking to you about, shoot me an email, please, in the next 3 days. And I'll reserve you a seat at the Los Angeles tutorial. Bye for now.